Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube station. I just want to adjust this lighting. I don't know what looks better. Listen, I want to talk to you today about tax debt settlements. Who am I? I worked for IRS for a decade. I was the IRS, so everything I tell you is not like sales wash. It's actually the truth about tax debt settlements. I've been on all the major news stations. Look me up at 777irs.com and you will learn all about me. There's a lot of stuff out there on the internet, all over. This ad, marketing. Everyone wants a tax debt settlement. Everyone doesn't want to pay the amount of tax they owe. Everyone's trying to discount it or reduce it. Well, I'm the bearer of the truth. I'm the bearer to tell you what this thing is all about. So, as a former IRS agent or revenue officer, I work what's called the Offer and Compromise program. One of few ways to reduce your tax is through the Offer and Compromise. That's the good news. The bad news is not a lot of people can actually apply for that and get it. 13,000 people last year got offers and compromise through. The other 40,000 or so, or not neighborhood, did not get their offers through, and there's a reason they don't qualify. Like I said, everyone wants to settle the debt, so let me tell you the news about the Offer and Compromise program so you'll know what it is. So if you think this is up your alley, that's what you have to look up, Offer and Compromise. Offer in Compromise. The Offer and Compromise settles debt for people who can't afford to pay their debt. But there's a couple things that IRS looks at very closely. If you have the equity to pay your tax and you just don't want to pay it, guess what? You're not eligible for the program because your offer is not going to go through. People will take your money and tell you you're eligible, but in fact, you're not eligible for that program. I'll give you, for instance, if you have $200,000 equity in your home and you owe IRS $100,000, you are not eligible for the program. So IRS is concentrating on two things. They're concentrating on your asset base. What's the value of your asset, and what's the value of your income? Your income has value, and this is how that income equation works. IRS is going to allow you certain expenses against that income. If you have money left over, then IRS wants that money. They go ahead and take what you have left over at the end of the month and they multiply that times the life of your statute. So if you have $1,000 left over a month, they're going to multiply it by how many months you have left on your statute. Here's the big catch, and here's why most offers get knocked out, and here's where people get ripped off. Companies don't tell them that IRS has a standard that they use. So you write your expenses down, and guess what? IRS says, we're not allowing those expenses. You're going to have to use our expenses. Oh, really? Yeah. You want to know what those are? Go look up IRS national standards for food and clothing, IRS national standards for housing and utilities, IRS national standards for car payments, IRS national standards for car expenses. So IRS removes your expenses, they put theirs in, and it's a really game changer. Only 13,000 people got their offers and compromise accepted. If you think you have a shot, you may as well contact me. And by the way, I don't take any money until I look at your financial statement, and I don't work with small cases. You really have to, have a debt of at least over $75,000. That's about the range IRS starts seriously looking at offers. So if you want to contact me, my number's somewhere, and give me a subscription. I've just told you the truth about everything you have. Another thing, you have to have all your tax returns filed all the time, and you have to, if you're self-employed, you have to have your estimate payments up to date. Thank you so much for listening. You can email me or just send me a text. Thank you so much.